All right. Thank you everyone for being here. 12,000 people at Devcon this year, right? Is that the number?
Officially.
How many of them actually went to Devcon itself?
Well, that's
8, 9?
tickets to the actual event.
Yeah.
So probably 30K.
30,000 people. Well, thank you guys for braving the rain, coming out here. I know many people were soaking wet as they walked through the door, so thank you for being present. And today is very casual. These guys and me, we go way back. I met Michael probably about a year and a half ago from a mutual friend, Raj, another higher up at Aquanow. And Michael and I just hit it off. We shared a lot of the same mindset of different theories about the space and opinions about the space. And they were one of the earliest investors in our venture capital fund, one of our earliest institutional investors. So thank you for supporting us and continuing to support us. And Ben and I go way back, maybe 8 years ago. Funny little side story, he did save my life in London, but we'll save that, that story for another time. Ben is the GP at Bankless, and Michael is the CIO of Aquanow Ventures, and we have David on the big screen from New York. David is the CEO and founder of Tread.fi, one of the most brilliant founders that I've had the opportunity to meet. I believe some people in this room are investors as well in Tread. You guys came into Tread as well.
Yeah.
So we co-invested, and all of us guys, he didn't yet. Now you have to. Can't be left out. So let's get right into it. I think one of the most important things is you guys giving your perception on yourself and your company, and then we'll get right into the market stuff. So Michael, we'll start with you.
Yeah, sure. So I run investments at Aquanow. We're focused on trading and infrastructure, really enabling. Different for a lot of people at Devcon, but like most of our clients are actually Web2 businesses. So when people come to me and say, "Oh, this DEX or whatever, can we work with you?" But so we focus on enabling distributors of crypto. It's a lot of fintechs, banks, payments companies, and then we met Darius for a lot of the investments that we do. So we do a mix of direct investments and fund investments, but yeah, generally everything, both from our clients to our investments, we just like to work with good people. So that's I guess what Darius said. Along.
And Michael's actually being very humble. Aquanow is one of the biggest digital asset liquidity providers in Canada. In the UAE, they have one of the most extensive DARA licenses, and they are working with large financial institutions, which I won't mention, to help crypto become much more accessible. So he's an extremely humble guy. Now Ben, on the other hand, super humble, super humble.
How many people have heard of the Bankless podcast, Media Brand? Okay, just making sure. So in late 2022, we launched our first venture fund. The $40 million early stage crypto fund, VC fund. Yeah, I'm based in Lisbon and excited to be here.
And we have David, David from Tread.fi. Go ahead, we can hear you.
Yeah, thanks. So Tread.fi was founded late 2022 as well. Prior to that, I was at Morgan Stanley, where I worked as a quant researcher for equities, futures, and FX. And at Tread.fi, we build algo trading infrastructure for crypto, and so we work very closely with a lot of hedge funds, and recently started working with retail traders as well to help them access centralized exchange trading, start centralized exchanges with trading algos.
All right, thank you, David. So let's talk about the elephant in the room. I think before the US elections, there was a lot of uncertainty in the market. What's going to happen? What will happen with Bitcoin? What will happen with the industry? I think a lot of money was waiting in the wings, undeployed, just waiting to see what would happen, especially institutional grade capital. Well, now we know, right? Trump is the president of the US, and I guess getting your guys' opinion, what does this actually mean for crypto beyond the obvious, right, bull run that we're in the midst of right now? I'll start with you, Michael. What are your thoughts?
I think mostly it just gives more clarity on the direction of regulatory. Like for us, because we work with institutions, we're always working in regulatory regimes that are favorable for crypto. And I think that meant historically, not the US. But I think for us, and I'm sure a lot of other people, that will start to change. I think we had seen a lot of like interest in crypto, or people who were interested in crypto move internationally from the US. So he's in Lisbon, people are in Dubai. I know a lot of Americans in Bangkok, so I think this could, we'll see how it goes, but it could be kind of like the start of a more resurgence of the US crypto. See, not that it didn't exist, but I think it'll improve, and I think that spreads globally because people view the US as kind of like a global leader for a lot of things, right through their own rules. So.
Ben?
Yeah, I mean, echoing the same thoughts. It's good to have that regulatory, a little bit more clarity. The brain drain from the US for founders, especially setting up companies outside of the US, it's just been a travesty, honestly. So it's good to see a little bit more clarity and hopefully some more crypto founders and companies start moving back to the US.
And Dave?
Yeah, I think aside from the clarity, it's historically there's never been so much. I mean, there's only been a couple of elections, but crypto's never been such a big topic. And so having the candidates take a stance on crypto for sure solidified a lot of the doubts that the U.S. institutions had in terms of the future of crypto. And then on top of that, it seems like Donald Trump was the candidate who was the one that seemed like a little bit more crypto friendly, especially for U.S. institutions and U.S. founders. And so all of that, I think, as well as like the general macroeconomic implications of Trump and the Republican Party sweeping the elections, helped crypto prices. And it's very strange, but crypto adoption seems to be directly correlated with prices. So retail people get really excited with crypto, especially Bitcoin and Ethereum and Solana hit all-time highs. And so I think it's a trifecta of good things happening in the U.S. So I'm currently in the U.S. right now. I'm pretty excited. Although I'm not American, pretty excited for what's to come in the U.S. in terms of fostering the crypto ecosystem here.
Great insight, guys. Thank you. And, Ben, you and I are American. We've had a love-hate relationship with some of the regime decisions, right, prior to this. So we probably still will maintain that sentiment, but at least it's more bullish for the industry that we're all in.
Yeah, I think right now, like it's clearly euphoric. People have high expectations. So the worry is that it isn't. It's hugely important to all the people in this room and people in this industry that if it's less of a priority for the administration, we'll see how good this actually is. But it's definitely better than the last 4 years.
Yeah. So next question, right? I think we all get this as capital deployers. Many people asking us, what's the next hype? What's the next trend? Where is money flowing, right? And I think it's always a challenging thing as a fund manager of a VC, making a decision of where to actually deploy capital. So understanding where value is actually accruing is a gift, it's a skill. Luck sometimes plays a role in that. Obviously, there's quantitative and qualitative aspects to making a decision of where we're actually going to place the dollar or cut a check. But how do you guys actually perform trend analysis and decide what's interesting? I'll start with you, Ben.
Yeah, so we're a 10-year closed-end fund, VC, and I think with crypto especially, it tends to be a little bit more shorter-term mindset with a lot of this. So I think for us, it's always just kind of zooming out. What are the big macro trends? I mean, crypto's now maybe $3 trillion asset class. Stablecoins are less than $200 billion. Stablecoins going to the euro dollar market, which is $5 trillion. Crypto in total, this cycle maybe 10, 15 trillion. And then where does it go beyond that? Tokenization of everything, $400 trillion market. So zooming out, like those are the big numbers that you're thinking about. And then like these narrative changes, kind of fickle, schizophrenic ADD attention cycle of crypto Twitter is like a little bit less relevant like from that perspective. So for us, I mean, we're pre-Series A, mostly pre-seed, so strong founders, good valuations within categories that we're longer term bullish on.
Michael?
I think we're similar but different in some ways because we're more of a corporate VC. So a lot of our decisions are made by what will benefit our clients. What kind of new technology can we support the project with as a strategic investor, but then also bring value to our clients by utilizing what they have been building. So by nature, we do a lot more kind of institutional, as I mentioned earlier, less kind of pure kind of crypto, Twitter, Web3 type stuff. So we do try to focus on stuff that helps our clients, but at the same time, echoing a little bit as well.
And David, I'll kind of repurpose this question because you're a founder. You guys don't directly deploy capital yet. Maybe one day you do set up a VC, but how do you guys actually make a decision of what VCs support, right? In terms of value add or just opinions that matter that help you guys sculpt your thesis and obviously come to market with a product that's truly viable?
Yeah, I think crypto is driven by narratives. So as a founder, it's important to be aware of what narratives are out there. It just helps kind of with the fundraising process when you don't have to describe everything from ground up. But that being said, what I saw possibly like in the last cycle, maybe 2 years ago, was there's a lot of these like shorter term VC funds, so like 3+3 or something, where they're kind of forced to just do tokens. But in the recent maybe quarter or so, I've seen a lot of projects get funded with a longer term approach, almost as like blockchain as a technology approach. And so I wouldn't call that a narrative per se, but it seems to be that the VC market has kind of consolidated away from like quick token investments and are now thinking a little bit long term. That being said, it's still unclear right now because in traditional VC, you typically have the companies go IPO in crypto. There really hasn't been any IPOs other than Coinbase and miners to look forward to. And so I'm hoping that the M&A and IPO kind of environment changes in general in the US and globally, so that more crypto companies can start looking for that. And then I think VCs will see that as a possibility and start factoring it into their models. And so, we're building towards blockchain as a technology. But that being said, we are also looking at a token. And so I can talk a little bit about that, possibly another question. But it's hard to keep track of everything. It changes like every couple months, but it's important to just be aware of what's happening.
Yeah, so I guess on that topic, right? I think there's some funds they are equity only, some are token only, some do a bit of both like us. Even though we're equity focused, we always want that token warrant. Obviously, having liquidity with a certain unique feature that we have, being able to have in-cycle distributions, which Michael is waiting for, and a bunch of LPs in this room are waiting for it, is something that we designed to be able to pay LPs much sooner than the average 5-year time span that it takes in a 7 or 10-year fund, if you're lucky enough to convert TVPI to DPI. With that being said, what matters more, equity or token? And I know this is a topic of contention in the space, but I'll start with you, Michael. What's your opinion? If you have to choose one, and one only, what is it?
We're just all about alignment. So it's like wherever the founder thinks the value is going to accrue, that we just want to be aligned with the founder there. So if they're saying, the economic value is going to accrue to the token, then we want the token. If they own a lot of tokens, then we want that. But it's kind of the same concept, I think, from traditional investing. So I think we just want alignment with the owners and to make sure that we capture the same value that they're doing. Because ultimately everyone's going to try to deserve for themselves. As long as we're aligned with that, and we're okay as the investors.
Ben?
Yeah, it's similar. I mean, crypto and tokens, ICOs, all of these things have only been around for 10 years, so it has been shorter liquidity cycles, but there's the maturation of the industry, so it's no longer send an investment, get a token 2 days later, there's longer lockup periods. Sometimes it doesn't make sense for a team to launch a token. Value accrues better to equity versus the token, and then you have regulatory uncertainty, which is a decision factor in like whether to launch a token or not. But now, with the Stripe acquisition of Bridge, $1.1 billion, there were two acquisitions and a merger just announced like yesterday. So I think like these are the more traditional exits of like IPO or M&A via equity. So it doesn't have to only be tokens, but there's a premium on tokens versus like these equity valuations because of the liquidity premium. So that's kind of some general thoughts there.
And David, for you, I know when we first invested, there wasn't going to be a token. The thought was maybe there would be, but in that moment in time, there wasn't going to be one. Obviously, as of lately, which we're happy with, there will be a token, most likely. It's not 100%. What caused you to make that decision? Why did you start with equity, with maybe a token, to now equity, but most likely a token? What caused that shift?
Yeah, in retrospect, I didn't really know what I was doing. Like when I was starting the company, and I decided to go with an equity instead of just focusing on token. But I think, looking back at it, if you're a founder and you're set on doing like a DeFi protocol and just focus on a token, I think you get tunnel vision into just making sure that the token does well. And then nowadays I hang out with a lot of founders, some of who have already issued their tokens, and I think the main problem with the token structure is typically it takes founders like 5 to 10 years to try to look for an exit, but now these crypto projects are able to exit in 1 or 2, and then it leaves the founders with a lot of liquid assets, and so they kind of lose the motivation to keep going. But for us, we started off as an equity business because that's what made sense for us. And then I think at some point I realized it's my job as a founder to try to do everything I can to make sure the company succeeds. And so without abandoning our flagship product, which is pretty much Web2 in terms of technology, I had to kind of dig in and be creative and see where we can provide value on chain so that we do have the option of issuing a token. And then once that was fleshed out, and then we actually went and built a lot of it already on chain, so it's live. And so once we found the product market fit for that, then we started thinking about a token. So it's like as a founder, you're thinking a lot about addressing TAM just in general, like in terms of your customers, but in reality, you're also addressing the TAM of VCs that are able to also invest in it. So another thing was when I was raising the last round where it was just a safe, there were a lot of VC funds who pretty much weren't investing just because they only do tokens. And so in order to keep the dual, or in order to just like maximize our TAM, I think we eventually ended up kind of settling on like a safe plus a token warrant for the next round. And so that was also another consideration.
Great, thank you guys. And final question here, as a founder or fund operator, how do you contend with token price and the simple fact that it can have very little correlation to value accrual? I mean, there's some tokens, let's look at Doge, skyrocketing. I mean, for obvious reasons, right? Elon now has his appointment in the government. I love the acronym, right, which is Doge, which is great. But let's face it, the token itself doesn't have any significant utility other than a representation of being a rebel, right? How do you explain a token like that skyrocketing compared to something that has a high degree of utility? The token is actually being used itself, but it's not reflected in price. So I'll start with you, Ben.
So first, tokens are incredibly powerful. Blockchains are permissionless, meaning people can do whatever the hell they want on it without asking for permission, including creating tokens. It's very easy these days. So I think if used correctly, they can be very, very powerful for a product or a protocol. but they can also be extremely distracting for a team. I mean, there's a reason why traditional startups wait a long time, and it's a little bit more mature company before they IPO, and you have this wildly distracting price fluctuating. So, for the team, back to Michael's point on alignment, like you want the team with a long vested with a vested interest having that value accrue either to the equity or the token, wherever kind of those stakeholders are, because it can be very distracting, and then the token becomes the product. And what are you trying to do? Are you selling a product and actually solving a problem, or are you just selling a new token to the world? So that's something people have to keep in mind when they launch a token.
Michael?
Just like one thing to add to that, 'cause I agree with everything Ben said, but I think like ultimately the tokens are just like any other live market where it's based upon supply and demand. So I think you'll just need to be cognizant of that fact. And you can say, my token has great utility, but if no one cares, it just means there's no demand for the token. So just one kind of like thing to keep in mind too, because that's if you want your token to do well, that's ultimately what matters more than anything. So
That and they're 24/7, 365, and there's no regulation, so there's a bunch of shady shit that happens. Like, there's a lot of other things as well. It's pretty wild.
And David, what's your opinion? Right? You have a different perspective on it, of course, being a founder, but the answer is just as relevant.
Yeah, I think typically in equities or other asset classes, we look at a lot of the fundamentals, the earnings and cash flows and things like that. But more so on the institutional side, you rarely see retail people looking at earnings statements, deciding, or like looking at fundamentals and deciding what to buy. And so in crypto, I think as we get more institutional adoption, some of that fundamental analysis will speak more as more institutional money start backing tokens with good fundamentals or tokenomics. But for the time being, it's largely dominated by retail, especially the spot market. And so you have tokens like Doge or Shiba just have these insane market caps because fundamentals just doesn't matter to retail investors. They like the cute animals. So I think in crypto right now, I have a pretty unique view on this because we trade on behalf of a lot of hedge funds and bigger traders. I do see them sometimes trading these new coins, but they're not buying it because they like the animal necessarily, but because the retail flow and the retail volatility creates these investment opportunities. They typically take a position in order to trade against retail, let's say. And so it is a bit of a self-fulfilling prophecy where in crypto, fundamentals just haven't taken over yet, and it's just institutions adding to the volume because retail people are trading it, because they think the animals cute, or something like that. I had a hedge fund manager tell me the other day, they're like, I don't feel like a hedge fund manager these days, I just feel like a zookeeper. I'm trying to figure out which animals I want to keep. So yeah, it's a weird environment, but I think it will change over time. And I think as more investment money or like institutional investments start backing tokens with their fundamentals and tokenomics, you're going to also see projects try to aim for that as a KPI because now it does matter for the team value as well.
Great. You guys delivered a lot of incredible content. Zookeeper. I'm going to take that. I like that. I think we're all zookeepers with or without the fuzzy animals, right? So thank you guys for being here. Really appreciate your time, your insight,